investor in stocks, in gold, in crypto, it's kind of the yellow light. You're not seeing the red flashing like, holy cow, we're going down with the ship, but you're seeing like, okay, there is a change going on here. And then the bigger question to bring back too is whether or not does inflation go back to 2% or under for the Fed, or do they get themselves in a pickle where we stick at 3% and it makes it very hard for them to bail us out whenever that big downturn comes?
Pro trader Gareth Soloway expressed his bearish outlook for the markets. Given the persistently high levels of inflation in the United States, the majority of Federal Reserve officials anticipate further interest rate hikes to occur within the remaining part of this year. Chair Jerome Powell told a House committee Wednesday, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go, Powell said on the first of 2 days of semi-annual testimony on Capitol Hill. Soloway holds the belief that gold demonstrates a notably negative reaction to interest rate hikes and increases. He finds this correlation fascinating and identifies with the same thought process observed during the period of low gold trading in 2022, which coincided with the rise in interest rates. In March 2022, gold prices reached a high of $2,070 per ounce. However, as the Fed began to raise rates, gold prices began to decline. By December 2022, gold prices had fallen to $1,630 per ounce. According to Soloway's analysis, the Nasdaq has experienced a substantial year-to-date increase of approximately 38%, reflecting a massive upward movement. In Soloway's perspective, this significant surge in the Nasdaq serves as a highly optimistic indication for the gold market. We will bring you some clips from Gareth Soloway. Make sure to subscribe to the channel and click on the bell icon for further updates.
Remember, the Fed basically came out and said, we are going to have to hike more this year. And the market was like, ha, dream on. We don't believe you at all. I mean, literally the market was like, nope, we don't believe you. But if you look at the 10-year yield, this is a very interesting pattern. This is actually a bullish channel of consolidation on the 10-year. And if it breaks above this 3.9 level, you're at least going back to 4.3 and potentially higher. And again, the question then is, how does that affect the overall stock market? The other side of the coin, too, is you can see that we've been holding these. These are two parallel lines. You can connect these lows here, and it's perfectly parallel as well. So there's a lot of support down here, and you have this bullish channel that, again, eventually bullish. When you have a downsloping channel, the thought process is eventually price breaks out to the upside. You don't necessarily know when, but downsloping channels break out to the upside. I do want to go over that gold chart. A lot of people have been asking me, do you still see gold breaking out this year? We've kind of see gold languishing here. And the one thing I would just point to, and this brings us over to the stock market side of things, is that gold is stalling here. But what we're seeing is there's a massive inflow of bullishness into the market. So in general, when you see stocks like Nvidia going to new all-time highs and things, in general, you see gold falling more because it's a safety hedge, right? It's people saying, hey, I don't want to be in gold because I want to be in risk assets where I'm going to make more than a few percent on a yearly basis, which is more along the lines of what you expect from gold. And so I find it fascinating. And it's the same sort of thought process that I had when we were trading at the lows on gold in 2022 and going back to 2021, and the markets were at their highs. You weren't seeing, and by the way, this is when the Fed was raising most aggressively, and generally gold reacts very negatively to hikes in interest rates. Gold was not breaking down outside of this kind of choppiness. It got to this low end and then started to rally back. So for me, when I look at the price action in gold, gold is staying stable while you're seeing risk assets aside from crypto rallying substantially. I think the NASDAQ now is year-to-date up something like 38%. I mean, a massive, massive move. And so to me, this is a very bullish sign for gold. It's telling me that you have sellers that are moving out of gold to move into risk assets, but there's definitely buyers there, thus price is not falling.
In Gareth Soloway's future projection, he anticipates that Bitcoin and Ethereum will comprise more than 80% of the total market. According to him, we witnessed a minor rally in the cryptocurrency market as a direct result of BlackRock filing for an ETF. Bitcoin has gained nearly 25% in value since BlackRock's filing. It rose as high as $31,458 on Friday, the highest level since June 7, 2022, and was last up 3.29% at $30,872. The 1929 stock market crash, famously known as Black Tuesday, stands as a significant event in American history. Taking place on October 29, 1929, it resulted in the most severe stock market collapse the country had ever experienced, ultimately leading to the onset of the Great Depression. According to Gareth's analysis, if we examine the Great Depression, we observe a drop of 50% following the 1929 crash, followed by a subsequent rally of 52%. From its highs, the Nasdaq experienced a decline of approximately 38%. Currently, we can observe a rally of 37.2%, which leads many individuals to perceive it as a signal of being in a bull market.
It might actually depend on regulatory clarity. Well, what do you think?
Yeah, I think that, from my perspective is definitely Bitcoin's on that track to be that digital gold asset. And I think Ethereum is likely the silver kind of the crypto markets. And what's interesting about gold and silver, right? So gold is your pure play where it's just a store of safety, inflation hedge, all that kind of stuff. And then Ethereum is like silver in that silver is more volatile than gold. So Bitcoin is less volatile and Ethereum is more volatile than Bitcoin. But also Ethereum has a use case, right? Bitcoin, there's, you don't really see a lot of stuff being built on top of that. So I think those, my guess is, and again, I could be wrong here, but my guess is the future is those two make up probably 80% plus of the overall market. And then you might have some of these other smaller coins kind of carving out their niches, but it's hard to know. I mean, and now we have the biggest news in the last week was that BlackRock filed for ETF, right? And so the question is, and I think the big question, we saw a little rally in crypto because of this, is does this mean because there's such a mega financial institution that they talked to Gary Gensler and Gary Gensler might have said, hey, listen, yeah, Bitcoin isn't a security, so we're going to give you, the biggest financial institution, the green light. Because I think if you look at the stats, right, BlackRock's filed for like 75 ETFs. They've gotten approved on 74 of them, right? So they obviously have this kind of ability to kind of say, okay, if we're going to do this, the probabilities of success are very high. Yet we've seen the SEC reject time and time again a spot ETF. So this is the NASDAQ. And I love showing this, right? So the NASDAQ chart, from the highs, it dropped about 38%. And what we can see here is that we've rallied 37.2% back up. Now, a lot of people, the 37% back up makes you feel like you're in a bull market. But what I like to show people is that if you go back historically to these past cycles, right? So let's even go back to the .com bubble, okay? And I'm going to erase that to keep it clean. But we actually had a drop in the .com bubble of about 41% and a 41% rally back up. All right. So now, okay, so that was the .com bubble, and this is the NASDAQ. Two factors don't make a trend. But then flip it over here. Let's go back to 1929 and 1930, the Great Depression, right? Well, take a look at the Great Depression. You dropped 50%, which was in there was the 1929 crash. And then you rallied back 52% before, mind you, take a look at this, before price ended up going down. And again, I mean, 85% from that high, right? So again, does it mean that this is 100% the way this cycle is going to play out? No, not at all. But it's important to recognize that even in Bitcoin, you have big rallies in bear markets, big rallies to the upside, and you can still go and be in a bear market. And again, I love showing, especially the 1929, 1930 period, because, needless to say, that was so long ago, but it was the Great Depression. And again, I want to be clear, I'm not calling for a Great Depression here. There's nothing in my charts that are saying it's inevitable that we're going to be in a Great Depression, but it's, again, showcasing how human behavior tends to repeat over and over again.
The markets are facing a number of headwinds, including rising interest rates and inflation. This has led to a decline in gold prices, which is often seen as a safe haven asset. However, some analysts believe that the Nasdaq's recent rally could be a sign that the gold market is bottoming out. If this is the case, we could see gold prices start to recover in the coming months. What is your stance on Gareth Soloway's perspective? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.